Hey everyone, welcome back to Corporate Dakota, the place where we try to figure out if these companies are really cooking with gas or just burning money. Get ready to dive into some official paperwork that might just be more interesting than it sounds. And hey, if you like getting these corporate secrets laid bare, make sure you subscribe and join our Discord community linked in the description below. Alright, so today we are looking at a Form 8K filed by Global Net Lease Incorporated. Now, this isn't their big yearly or quarterly report, but rather a report of a significant event. Think of it as a company raising its hand to say, hey, something important just happened and you should know about it. The company itself, Global Net Lease Incorporated, or GNL, as you might see. It referred to focuses on acquiring and managing a diverse portfolio of net lease commercial properties. Basically, they buy buildings, lease them out to tenants, and collect rent. It sounds simple enough, but the devil is always in the details, right? This report is dated the 8th of January 2026. What happened on that day, you ask? Well, the company announced they completed some key strategic objectives in fiscal year 2025. That sounds like good news on the surface, but what does it really mean for investors and the company's future? Before we get into the meat of this report, it is always good to know what exactly is being traded on the stock exchange. GNL has its common stock listed on the New York Stock Exchange under the ticker symbol GNL. They also have several series of preferred stock like the 7.25% series, a cumulative redeemable preferred stock also on the MWICE under GNL PRA, and others. This just tells us what pieces of the company are available for public trading and how they are structured. Now let's cut to the chase. The main reason for this filing is a Regulation FD disclosure. Regulation FD is all about fair disclosure. It means that if a company releases material information to one person, it has to make sure that same information is available to everyone. Here they are announcing the completion of their fiscal year 2025 strategic objectives. So the actual details of what they achieved are in a press release attached as Exhibit 99.1. The filing itself tells us this press release is not considered officially filed for purposes of certain legal sections, so they are being careful about how they disclose this. But for us, it is the crucial piece of information. Here is where things get a little nuanced. The report includes what are called forward-looking statements. These are statements about future expectations, possibilities, and plans. Words like may, will, anticipates, believes, expects, estimates, projects, potential, predicts, plans, intends, would, could, and should often signal these. They are essentially saying this is what we hope happens, but they're also warning us that things might not work out that way. And they are not kidding about the risks and uncertainties. They explicitly state that these could cause actual results to differ materially from what they are predicting. This is standard language in these reports to protect the company from lawsuits if their optimistic predictions don't pan out. Basically, they are saying we're hopeful, but anything could happen. Some of the specific risks they mention involve future acquisitions or dispositions. This means buying or selling properties. These actions are subject to market conditions. Can they get the capital they need, and timing? If the conditions aren't right, or if they can't find a good deal, they might not make any moves, or the moves they do make might not be good for the company. This is a pretty broad risk statement that covers a lot of potential issues in the real estate world. They also make it clear that these forward-looking statements are only valid as of the 8th of January 2026. They are not promising to update you if things change unless the law requires it. So if you are watching this video months or years later, remember that these statements might be outdated. This is why reading these filings as soon as they come out is so important if you want to stay ahead of the curve. This section is pretty straightforward. It just lists the exhibits that are part of this filing. The most important one for us is Exhibit 99.1, the press release. This press release is where the actual substance of their achievement announcement is found. The company is reporting that they have completed key strategic objectives for fiscal year 2025. And then we have Exhibit 104, which is the cover page interactive data file. This basically means the filing is in a format that computers can easily read and process the data. Useful for regulators and analysts, but not something we typically need to dive deep into for understanding the business story. Finally, we get to the signatures. This is where the authorized officers of the company sign off on the report, confirming its accuracy to the best of their knowledge. In this case, it is signed by Edward M. Weil Jr., the Chief Executive Officer and President. This is a formality, but it shows accountability from the top leadership. So what is the big picture here? Global Net Lease Incorporated is signaling that they've hit some important milestones in 2025. This is generally a positive sign. However, the filing itself, the 8K, doesn't give us the financial numbers to back up this claim. We need to see that press release Exhibit 99.1 to understand what those objectives were and what the actual financial impact is. The language about forward-looking statements and risks is typical corporate legal speak designed to manage expectations and liability, but it also serves as a reminder that good news today doesn't guarantee good results tomorrow. The real estate market can be fickle, and companies like GNL are always subject to economic ups and downs, capital availability, and the performance of their tenants. Without the details of that press release, this 8K is more of an announcement of an announcement. It tells us something happened important, but we still need to wait for the full story to assess its true meaning and impact. Now, looking at Global Net Lease Incorporated more broadly, we can see they operate in the real estate investment trust or REIT sector. This means they are legally required to distribute a significant portion of their taxable income to shareholders annually in the form of dividends. This can be attractive for income focused investors, but it also means REITs have less retained earnings to reinvest back into the business compared to traditional corporations. The success of GNL hinges heavily on their ability to acquire properties at good prices, manage their debt effectively, and maintain strong tenant relationships. Their preferred stock offerings also indicate a strategy to raise capital through different means beyond just common stock, which can diversify their funding sources, but also add complexity to their capital structure. The mention of strategic objectives completion in 2025 is likely tied to their long-term growth plan, which typically involves expanding their property portfolio, acquiring new tenants, and optimizing their existing assets. The risks they highlight are very real for any company in the real estate sector. Market conditions can change rapidly. Interest rates, for example, directly impact borrowing costs and property valuations. Capital availability refers to how easy or difficult it is for the company to secure loans or raise equity to fund new investments or refinance existing debt. Timing considerations mean that even if a deal is good on paper, it might not be the right time to execute it due to market volatility or other external factors. And of course, the risk that acquisitions or dispositions might not happen on favorable terms or at all is a constant factor in corporate strategy. This is the reality of business growth, particularly in a capital-intensive industry like commercial real estate. From a Warren Buffett-style perspective, you always want to understand the underlying economics of the business. How durable is their competitive advantage? In GNL's case, their advantage likely lies in their ability to source deals, identify properties with stable long-term tenants, and manage their portfolio efficiently. The net lease structure, where the tenant is responsible for most operating expenses of the property, can provide predictable income streams for GNL, which is a positive. However, the concentration of risk in specific tenants or property types can be a weakness. Diversification is key to mitigating these risks. The company needs to constantly evaluate its portfolio and adapt to changing market demands and economic cycles. The completion of strategic objectives could signify successful execution of their diversification strategy, or perhaps a successful deleveraging effort. Without the details from the press release, it is hard to say definitively, but it signals a proactive management team. The challenge for investors is to look beyond the positive spin. While completion of key strategic objectives sounds great, we need to ask, what were those objectives and what was the cost and benefit? Did they achieve aggressive growth targets that might have come with higher risk? Did they successfully divest underperforming assets to strengthen their core business? The lack of financial tables in this specific 8K filing means we cannot analyze their current financial health directly from this document. We have to rely on that attached press release. However, the fact that they are even filing this indicates a commitment to transparency, albeit a minimal one in this particular instance. A strong company will typically provide clear, actionable data to support its claims of success. Overall, Global Net Lease appears to be navigating complex market conditions. Their reliance on preferred stock and common stock alongside debt financing means their capital structure is key to their performance. The ability to consistently deliver value to shareholders through dividends and potential stock appreciation will depend on their strategic execution and prudent financial management. The most notable risk remains the inherent volatility of the real estate market and their ability to adapt to changing economic landscapes. Alright, that is our quick decode of this Global Net Lease 8. It is a signal that important things are happening, but we still need to read the full announcement to get the real story. What is your take on companies announcing objectives without giving all the details up front? Let us know in the comments. If you found this useful, hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community for more discussions. See you next time.